breweries have raised factory gate prices by an average of 200 birr a crate, following the Ministry of Finance's new excise tax adjustments. The ministry aims to collect 24.4 billion birr from excise tax this fiscal year, with over 37% expected from the brewery industry. Beverages with up to 5% alcoholic content now face a 40% excise tax, or 28 birr a liter, adding 9.24 birr a beer bottle. However, another more pressing issue is looming for the brewers: the excise tax stamp. The ministry introduced a rule on the backdrop of a 4-year proclamation to combat counterfeiting and improve tax collection transparency. However, breweries worry that the excise tax stamp system could make products unaffordable, shrinking the industry. Ethiopian Brewers Association, representing major breweries like Heineken Ethiopia, BGI Ethiopia, Dashen Breweries, and Habesha Breweries, is negotiating a favorable deal based on a study by HST Consult plc, which warns that the proposed system may cost the industry $372.3 million, with negligible benefits in preventing counterfeit products. Despite industry concerns, the Finance Ministry officials seem unimpressed. The Ethiopian Customs Commission drastically tightened the rules for duty-free import privileges starting July 22, 2024. Commissioner Debela Keta announced that only Army and National Intelligence chiefs, along with the Minister of Finance, retain the authority to grant these benefits. The commissioner ordered his subordinates to halt processing duty-free imports, reserving final approval solely for his office. The decisive action disrupts a wide range of incentives designed to attract domestic and foreign investors. Customs officials plan to curb the widespread misuse of duty-free privileges, which has caused systemic and regulatory issues in revenue collection. Duty-free privileges for investors were suspended last week pending an investigation into recent allegations of illicit imports. The embargo is feared to create backlogs at Djibouti and Mojo dry ports, impacting the Ethiopian Investment Commission's strategic plans. A week before the embargo, Commissioner Hana Araya Selassie announced over $3.8 billion in foreign direct investment in the past fiscal year, an 11.5% growth compared to the previous year. She unveiled a 2-year strategic plan to improve logistics operations and rolled out competitive incentives to attract foreign investments. Stay tuned. We will be back after the ad. We are back with more highlights. The National Bank of Ethiopia Governor Mamo Mihirate has initiated a new directive allowing commercial banks to trade their liquidity through interbank money market operations, aiming to enhance financial stability in the sector. The directive, introduced last week, enables banks to access short-term liquidity by borrowing and lending directly from their excess reserves. The directive outlines regulatory mechanisms for liquidity trade, including requirements, trading timelines, platforms, and mechanisms for a safe, efficient, and collateralized interbank market. Until an electronic trading platform is fully implemented, a manual book entry system will facilitate interbank market trading, with physical certificates temporarily substituting for dematerialized securities. The central bank's 3-year strategic plan includes several directives aimed at establishing open market operations to combat inflation. Recently, the central bank set an interest rate of 15% as the anchor of its monetary policy, 3 percentage points lower than the previous rate for commercial banks under liquidity strain. The law also introduces risk management measures, such as a reduction of underlying assets to mitigate market and credit risks. Transactions will be backed by collateral securities similar to those used in the central bank's refinancing operation. In the aftermath of a devastating war that severely impacted its economy, investors in the Tigray Regional State are facing difficulties in resuming operations due to financial shortages and the inability to import duty-free materials. Over 22 investors seeking loans of more than 10 million birr each have been required to appear in person at bank headquarters. Yet progress remains elusive. Nearly 25 other investors have struggled to access duty-free privileges essential for importing machinery needed to rehabilitate their businesses. The Tigray Chamber of Commerce has voiced profound concerns, calling for special attention to be given to businesses recovering from the war. Ethiopia's 31 banks, which have issued nearly 2 trillion birr in loans and advances as of June 2023, maintain a non-performing loans ratio of around 3.6%, below the regulatory threshold of 5%. Due to the high number of non-performing loans in Tigray, commercial banks are now implementing strict risk management policies. Business consultants argue that expecting commercial banks to reopen their doors to investors after suffering from unpaid loans is unwise. Ethiopia's alcohol manufacturing sector is wrestling with macroeconomic and external pressures that continue to affect industry giants like Balazaf and national alcohol brands. The sector is experiencing substantial price surges in raw materials, security concerns, lack of market access, and competition from illicit traders, all of which have undermined production and sales. Molasses, a crucial input for alcohol production, has seen its price double to 2,691 birr a quintal. Similarly, ethanol, technical alcohol, has risen by 50% to 212 birr, severely impacting production costs. Established in 1905 with an annual revenue of 1.2 billion birr, the National Alcohol and Liquor Factory has had to cut production by half due to rising raw material costs, security issues, and the influx of cheaper products from illicit traders. Balazaf Alcohol and Liquors Factory, another major player, has been operating intermittently for the past 6 months due to soaring raw material prices and market access issues stemming from security concerns. Operational fluctuations have led to declining sales and revenues. The factory has reduced its production by 25% from its 30,000-liter capacity, resulting in a 60% revenue drop over the past 3 years. Attempts to mitigate losses by doubling prices have only led to a 30% decline in demand. That's all for today. We'll be back with more updates next week. May good luck and fortune always be with you.